Hello. Welcome to my channel, my dear friends. My name is Avilash and I'm a trader next door. In this video, I'll be analyzing the chart of GBPUSD, the cable. So if you're watching my videos for the first time, you can subscribe to my channel for regular market analysis. So let's get started. So there's a photo chart of DXY, and as we all know that there was a huge drop on the chart of DXY, and we saw a good upside on the chart of GBPUSD, Euro USD, gold, and others after the CPI. So we had a symmetrical triangle pattern. I clearly told you that there will be a breakout soon on the chart of DXY, and yes, we had a breakdown. So DXY started falling and it made a low of 103.60. Though we can see that DXY is trying to recover, but is this strong enough? The market does not have the buying power. Most importantly, the story does not end here. After the CPI today, we have FOMC. Okay, we have FOMC coming up. So FOMC will be very important for the FOMC. During the time of FOMC, obviously I'll be sleeping because the time is very odd here. It's 12:30 a.m. in India, so obviously I'll be sleeping. But the traders, okay, the traders from Europe and USA, please be careful during FOMC because after sharp move after CPI market, most probably will be taking rest for the day so that it can show some disco moves again during the FOMC. Dollar a week after soft US inflation data focus switches to Fed. The US dollar struggled to gain foothold on Wednesday after a sharp dive overnight on cooler than expected inflation data, which fueled expectations that the Federal Reserve will chart a moderate rate hike path later in the day. After delivering four consecutive 75 basis point hike, because as we all know, Fed was extremely aggressive throughout 2022. Okay, the US central bank is widely expected to increase interest rates by 50 basis points as it concludes its two-day meeting on Wednesday. As the inflation is softening, we can see that not the expected number of 2%, 3%, but still inflation is going down slowly. So as a result, Fed market is expecting that the Fed will be increasing the interest rate by 50 basis points instead of 75 basis points. Let's wait and watch how the news comes out and how does market reacts. Okay, again we are back to the chart of DXY. So yes, we saw a drop. Again, I'll repeat that we don't have any proper support on the chart of DXY. After FOMC, if DXY starts falling, then please do not look for any support because there is no immediate strong support on the chart of DXY right now. Okay, and during the day, if market starts going, then you can see that market will be facing some resistance around 104.60 to 104.80. This is the new resistance, and the reason is the trend line from the top. You can see the trend line is acting as a dynamic resistance here, as well as the previous support will also become a resistance here. So the trend line from the top and the previous resistance, okay, previous support which have turned into resistance right now, okay, will definitely play a big role of resistance right now. So this level will be very crucial before FOMC for DXY. I don't think so DXY will be able to break this level. It should reverse from 104.60 104.80 before FOMC. After FOMC, I cannot predict the market. Okay, nobody can predict the market. And let's have a look at the chart of pound, dollar, GBP, USD. The most interesting thing that I noticed, okay, I noticed two interesting things on the chart of GBP USD. First of all, GBP USD is still continuing the structure of higher highs. Yesterday also we saw GBP USD forming higher highs. Okay, and as we all know, higher highs and higher lows signify market in uptrend. There is no doubt. Okay, there is no doubt. But the problem is that on the weekly chart, okay, the weekly chart, GBP USD is still struggling to cross the 50 moving average here. Okay, and the 50 moving average, you can see that previously the same moving average has acted as a strong resistance and it is doing the same job again. So as a result, okay, I am not very sure regarding the up move of GBP USD. I think that something is cooking up here. Some at least some strong sellers are present here who are not allowing the market to cross the level that easily. As we can see right now, that market is approaching the previous trend line again. Okay, the trend line which is acting as a dynamic support for a long time. But my dear friends, market has already tested the trend line 6 to 7 times. So please be careful. Do not trust the trend line. Okay, do not trust the trend line for the day. See, this is your hard-earned money. Please protect it. Capital protection should be your first priority always. So if market comes down during the trend line, to the trend line during the day, observe the market. If possible, try to avoid. Okay, and try to wait for the support around 1.2280 or 1.2285. The red line that I have drawn here. The reason behind considering this as a support is you can see previous resistance to act as support. Again, we have Fibonacci 23.6% retracement level, and yes, the trend line is also present. So we have three factors here. So during the day, if market comes down to this level, 1.2280, 1.2285 should act as the support for the market right now. And as we can see that right now market is not showing extreme volatility, so as a result, good chance of market taking support. If market bounces, we can definitely go for a buy position from the support level here. And in case market starts falling, okay, in case market starts falling before FOMC also, after FOMC also, okay, before FOMC also, after FOMC also, if our market starts falling, then your first support will be 1.2110, 1.2100. We are considering the Fibonacci 50% retracement here. And if market fails to take support, and if you see market continuing the selling power or selling pressure, then observe the market at 1.2040 to 1.2030. In my personal experience and my personal observation, I have seen that Fibonacci 50% retracement level and Fibonacci 61.8 retracement level plays a big role of a support and resistance, especially with GBPUSD. That's my personal observation. Okay, your opinion may be different. So I think after FOMC also, before FOMC also, if market shows a sudden drop, then these two levels 1.2110 to 1.2100 and 1.2040, 1.2030 have the potential, have the strength to provide the required support to the market. And during the day, okay, during the day, if you see market going up, okay, if you see market going up, then 1.2 the sorry, let me write it down again. I'm talking about the yesterday's high here. Okay, if market goes up during the day before FOMC, if you see market going up, then you can expect the market to reverse from the yesterday's high. But obviously during FOMC market will be volatile, and if market starts going up, probably market will continue the structure and market will break the previous high. And if market breaks the previous high, listen to me carefully, if market breaks the previous high of 1.2442, then you can consider taking a buy position as well. But do not take a buy position immediately. Observe the market for 20-30 minutes at first, because during events, okay, we see sharp price rejections also. So as a result, wait for 20 to 30 minutes, and if you see that market is sustaining above this level for 20 to 30 minutes, then you'll get a confirmation that okay, more or less market have the intention on going up, then you can consider taking a buy position. But do not take a buy position immediately. That can be a dangerous as well. Okay, I'm not talking about, okay, I'm not talking about buy at retracement or buy at pullback. I'm just saying that let the market settle above the resistance. Okay, let the previous resistance become the support, not the fully support. Okay, at least let it settle for some time. Okay, it becomes more reliable then. That's it. Okay, hopefully you got my point. Thanks a lot, and please follow proper risk management. See, this is my analysis. I can be wrong as well. No trader is 100% accurate. Bye bye, take care, and all the best. Do not gamble with your hard-earned money. Bye bye.